Are we recording? Is the camera on? I don't know. That's if it is on, that is going to be the introduction to the video. I do not know what I'm doing here. Okay, it looks like it's recording. It is recording. Okay. Hi, everyone. Today is December 4th, 2025. Here is the year-to-date performance of the Roth IRA, and I am trying to change this in real time into a drip fund. So portfolio return over the year to date, 21%. I'm not sure how this number is above 7,000. I just maxed out the Roth with a contribution limit. And you can kind of see the graph here from January to December. There were a couple bloody months. March, October, pretty rough. With November coming through, this was absolutely carried by my silver positions and the calls that I have. As you may have seen in my previous videos, I sold half of my position because it ran over 100%, have free exposure to the contracts expiring in February. And I went ahead and took those gains and reallocated them to silver leaps. And I'll cover those in a second just on the spreadsheet here. But they expire 2027 January. So just over a year on those. I will go ahead and cover in a next video my price target for silver, for what I see as a spot price, and the specific ticker of SLV. They're pretty much the same, but I'll go ahead and give that video in the future. So here we can go ahead and review the holdings. Again, there are going to be a few here that I will be getting rid of. So silver, the ones that are expiring in February, I hope to close pretty soon. It did have a red day today. I'm still up 95% on those. And of course, I can write them down to zero if I wanted to. Again, it's free exposure, and I do think silver has much more room to run. We'll go ahead and see as in December, I can almost, for me personally, I feel like there's 100% conviction in the fact that the Fed will be cutting rates on the 10th, I believe, is the meeting. But anyways, here you can see highlighted in yellow the names that I will be reinvesting in that have automatic reinvestment. So I haven't bought any partial shares. This right here, JEPQ, 40.379 shares. I purchased 40 earlier this month, or maybe just last week of November. But most recently, they paid their dividend on December 3rd, which was yesterday, and acquired 0.379 shares. So we can already see the reallocation, and you can, on this column J here, you can see monthly, quarterly, the respective dividend payout frequency for these tickers. And I'll go ahead and describe each one as I go. The yields are pretty strong and aggressive for these names, as you can see. I mean, double-digit yields on certain names. You do have to check off a list and agree, for Fidelity at least, to invest in these names because they are considered extremely aggressive. Just to put that out there. I think I have time. Let me enjoy myself. Things like that. I feel like TQQQ also pays a dividend. I don't know why. Yeah, it does. I'm not sure why I don't have that highlighted. And I believe it is quarterly. I'll go ahead and check on that if it's not. But anyways, we have BlackRock Science and Technology. I saw some of the holdings. I don't know why I only bought 5 shares. I think it was because I had cash settlement. I just had to wait. I didn't have the credit in the interim. So I purchased 5 shares just to have the exposure. The holdings that they have that intrigued me, of course, NVIDIA, Spotify. But in terms of private holdings, we have Klarna. Unfortunately, Klarna is growing. And anyone who holds Klarna or anyone who's working Klarna, I don't mean it like that. It's just if Klarna is successful, the overall economy is cooked. Anyway, so they have Klarna, they have ByteDance, they have stake in Databricks as well. So those were very attractive names. Picked up BlackRock Science and Tech. JEPQ. If you're in the finance space, anywhere on Instagram, any media, YouTube, everyone goes for JEPQ, JEPI, JP Morgan's equity ETF. And I mean, you can kind of see why this yield is so healthy. I think they've been growing over the past year with this bull run, and I'm extremely bullish going into 2026. I believe we will rally. I think we set the stage to do so with our current economy. Trump will be putting someone probably with his same line of sight for the economy in that Fed chair, as Jerome Powell will step down in May, I believe, 2026. So keep an eye out for that. Also, it's not just Jerome Powell stepping down in May 2026. It's the fact that we know, or the general public consensus, we know that Jerome Powell will be stepping down. So it really doesn't matter. His words will matter much less, and the weight of those words will matter much less than whoever is stepping up to take his place and coming into power. So just to put that out there as you go ahead and see these Fed meetings in the future. All right, here we have Altria Group, MO. I purchased this long time ago. I can't recall, but they've been paying a very good dividend. I mean, at this price, I think, yeah, at this price, it's a 7% yield. I purchased this sub 40s when I first got in, and I incrementally added. Again, this is not the only portfolio I manage, so I might get mixed up with the cost basis here and there, but the main lot of this came last year. All right, so QQQI, everyone knows QQQ, tech sector. This one pays you a monthly dividend by selling covered calls. I do have a fairly heavy position, as you can see, relative to the rest of the funds, at least, instead of individual ticker names or stock picks. So I'm pretty bullish for 2026. I think tech, again, leads. I probably should go ahead and diversify into IWM or something, but we'll go ahead and get that covered in another video. Schwab, SCHD. This is also a very popular name amongst the finance dividend guru people on Instagram and YouTube and whatnot. Kind of see that going on. They pay a quarterly dividend. And this one is for the less aggressive. I do plan to incrementally add. Again, it's reinvested, but everything that you see that pays a dividend that isn't highlighted in yellow, I plan to receive in cash. And for those, I will probably reallocate towards, I will probably allocate towards QQQI over something like SCHD, just because, again, very aggressive for 2026, steadfast on this growth, on the growth for this account. And again, I really don't want to open this account too often. QQQI, I guess, is relatively expensive when we're talking about that in comparison to SCHD. So again, all the extra income that's not being reinvested, I will probably purchase the heavier hitters in terms of price. All right, moving down the list, we have SPYI. Again, this just tracks the S&P. And this also does the same thing by selling covered calls, paying you a dividend every month. SVOL is inverse VIX, and it is very risky. I mean, you can see the yield here compared to the others at 19.5% is what the annual yield is projected out to be. That's, I mean, yeah, very, very heavy return. I believe it is just selling covered calls for S&P and then also inverse VIX. And then everything else in that portfolio is treasury or government treasuries. Okay, TQQQ. Okay, same deal with QQQ, except triple leverage. Again, aggressive. I am pushing for this 2026. I really think tech will run. I think it'll be the leader for the bull run. And I don't know when quantitative easing will begin in 2026, but I think it will. Sooner than later, honestly. Again, just my take. Do not copy any of my trades. This is just me reflecting on where our current market is and how I think I can benefit from it. All right, VTI. This one, a friend recommended to me a while ago when I was telling him I should buy S&P shares. But yeah, this is a total stock market ETF. This is a broad exposure to US equities. I like it. 2 shares so far. So, and a very small yield. So, next video, you might see 1 extra share added on here. And then Whirlpool, they're paying the dividends and, they do the house appliances, but I am not too keen on adding to this position because those tariffs have been hurting me in this position. All right. So this is without reinvesting. And what I mean by that, this is the annual dividend yield for all these names put together. However, I will be, and I don't believe that Sweetgreens has a dividend yield on here just because I'm selling covered calls. And if it fills, then I don't have the shares anymore. But about $1,700, we round down here. We like to play the conservative game. So yeah, so about $1,700 a year. I will go ahead and map this out on my own just to get an idea of what impact I can have by the reinvestment. Of course, JEPQ with the extra 0.379 shares, I will be getting a little bit of a higher dividend than I received most recently as of yesterday. So I'm going to go ahead and project that out, and I will add, if I just do this and I multiply, let's add 15% to it over the year. Yeah, I should be receiving, that's just an arbitrary number, but just about $250 extra applied when I'm adding that 15% multiple across the board, assuming that, these names get reinvested in. Maybe there's some growth, maybe there's not, or growth and dividend rather, because we are playing for the dividend here. Of course, appreciation in the ticker name would be nice. I am playing for the appreciation of these contracts here. Especially the silver is very heavy weight on the portfolio. SPRB is a laggard. I'm a baggy on that, maybe hoping to break even, but I do like the company. They did just release, I think, pipeline news that is not good for my position, but I digress. So this is currently a value of 40,437. I think just yesterday was 43,000. Silver really got beat up today, and my contracts have come down. I did average in and added 10 more shares today, bring that cost basis down just a little bit. And so, yeah, this is the portfolio as of December 4th, 2025. I will be, again, exiting most of these positions here. As you can see, I don't love sweet greens. Papa John's, or sorry, not Papa John's. Yeah, this is Papa John's. Papa John's, I really like the appreciation. I mean, Apollo has been, just throwing random bids at it, $65, whatever it is, and it's pretty volatile trading in that sense. I believe I'm going to keep it for the foreseeable future. These names will probably stay. I'm not loving Procter & Gamble. So yeah, this is just my outlook for what's to come. I will probably trim my Whirlpool position even more and reallocate those funds towards the indexes that I like. Starting January, I'll be very busy, cannot manage these funds anymore or these portfolios as active as I'd like to. So again, reinvestment, it's here. It's the way to play. Focus on the active. I'm at that stage in my life where I really need to focus on my active income, and the portfolio income is just not ready yet. Hopefully, 10, 15 years down the line, when I've built a large enough portfolio, it can yield me something worth investing and worth monitoring as a full-time job. But now $2,000 a year won't cut it. So I don't even think I can take my parents out to dinner every other week with this, but I will update you, and hopefully we can see this number grow together over the next year or so. I don't have an aggressive price target. Of course, these are all going to be growing, and I hope that grows to more than $2,000 over a year. We'll see. It really does depend on where silver goes over the next few months, and then I guess even the leaps that I have for over a year. I honestly plan to add to this one. Everything else can close. The single names can close out, but I do plan to add to my silver leaps. Again, I will cover in a future video the GSR and how I believe silver will catch up in a certain way, and where my price target is, where I exit, etc. So, yep, that's it for today, guys. I appreciate you listening, and as always, take care of your mental, your physical, and your financial health. I wish you the best. Have a great day. Another gun show before we head out. All right.